Everybody, this is Joshua Hayes at BigWaveTrading.com coming to you with the April 13th stock market wrap up for you to use tomorrow or any day you want this week. As like I said, I'm not an intraday player. I play for a series of days to week. So let's go ahead and start it off with the New York Stock Exchange. I figure that'll be a good place to start. As you can see, it had a 0.63 up day today. As you can see, let's go all the way out on the indexes. Charts, we'll flatten them up. Like the last one I was just showing you, let's do a different one. Let's look at one that I'm already long for a long time. AIPC, you can see what it looks like all flattened up, going all the way back on a zoom too. Shows how beautiful the chart's been since April to April. But if I go all the way out and extend it from the lowest price on the screen, March, to the top price on the screen, and only have that in the window pane, you can see it looks a little bit more open and wide, but really it's really flat. Stocks, it's best to look at it this way. That way, whenever you see these perfect patterns like back here, you can buy them and be like, look at how perfect that round cup-ish base was. And it's a cup base because on a zoom 4 actually probably show better. You can see zoom 3 actually does it the best. That's a cup, zoom 2 cup, zoom 1 of course cup. Base on base here because you can't count this as the first base. This is the first base here in April and May, and to be honest with you, whenever you go tighten up on it, 1, 2, 3 can only be a 3 weeks tight, followed by another 2, 3 weeks tight. So really what you got here is a 1, 2, 3. Unless you want to do this, an ascending like base, I'm going to call it base on base, 3 weeks tight on top of a cup, small cup base breakout. But you can see how it works here. See how it works when you use the shift and over button so we can go through it fast. Just see how nice and tight and flat it is as it moves up. Nice and solid. However, on the New York Stock Exchange, I can't really see the price bars that well, so let's go all the way out. Now you can see open 5376, gets all the way down to the intraday low of 5304, comes all the way back up to 5444, manages to close at 5410. Not bad whatsoever. However, the way it came off the highs, I'll show you intraday here in a bit, wasn't what you normally like to see. S&P 500, let's look at S&P 500. You're going to see a very similar thing. Opens at 855, dips all the way to 845. However, showing you that this is indeed a changed market from 2008 and early 2009. It got back up to right around 864 before closing at 858. Very good job, S&P 500. And here on the NASDAQ, as you can see, 1641 open, hit 1630. Hit 1660 intraday, but closed at 1653. Still up on the day. So that shows you NASDAQ up on the day, New York Stock Exchange up on the day, S&P 500 up on the day. What do you notice about all these, though, up days? Look at the second pane window. What's lower than the day before on every index? Volume. However, the good news is the Dow Jones Industrial Average fell on lower volume. As you can see here, volume was barely above the 50-day moving average. See the bullish tail, 8082 open. Gets all the way down to 7963, but manages to close well off of it at 8057. Still, it's a down day on lower volume. And if you consider the NYSE was only, well, it had a good day actually. So let's use the S&P 500. Up only 0.25%, and then definitely the NASDAQ up only 0.05%. You can say that it was great to see basically a consolidation day on lower volume. Not bad at all. However, our recent lions, how do they act? SP 600 holding in there, barely down, and then the mid-cap 400. See how that held up? Oh, man, sorry, guys. Always hate it when I'm pressing the wrong buttons. There we go. See, barely down, 0.07%. Nice tail. Now, I need to go here and actually look at the IBD charts. And I'm sorry it's taking forever to pull up, but I've had my computer on forever, and it's not a Mac. Come on, I'm pressing markets. Market. All right. S&P Mid-Cap 400. How is volume daily? Way lower, but that's not the right volume, so it's not in yet. So what's S&P 600? Volume's not in yet, so never mind. We don't know yet. And that's why, you know what? After all these years, I think I figured out why Telechart doesn't show me volume for the S&P 400, 600, or the Russell 2000. I can't believe I just now figured it out. Because it comes much later when they when they figured it out in the data. Now, at the same time, let's see how leading indexes did today. I'm sorry, we can only look at those over here. So let's go to markets. Let's go to IBD 100, down 0.31%. You can see the intraday tail. It actually already has volume up. Volume's lower than the day before. Barely down. That's what you want to see. So now let's go look at the IBD 85.85. IBD indexes 85.85. Oh, it was actually higher today. 2 points. 1.80 would have been 1%, so it was higher by like 1.1, 1.2%. That means it led today, folks. The IBD 85.85 led today, up 1.2%. Hopefully that's right. I mean, somebody tell me if I'm wrong. No, I'd still be right because the weekly shows me that too. So 1.1, 1.2%, 1.15%, whatever it is. Higher volume slightly. You can see there volume 2.169, 2.092. So way to go. So leading stocks are finally in on it. Beating the market overall, which is the first time I've seen that in a long time. So the NYSE is leading with 0.63. NASDAQ only has a 0.05, and it's been the leading according to the relative strength line from the November lows, as you can see. But yet the IBD 85.85 won today, so it's very good. Let's see how much time we have left on the video. Still plenty of time. Thank you, God. So now I can now show you oil. Oil's in this range that I was telling you about. I'm going to draw lines like through it. Basically saying like through here. That looks great. It's about right here. Come on, flatten out lines. Sorry guys, I just trying to be as perfect as I can for you. So there you go. So I kind of see it stuck in between this range, as you can see for right now. My line wasn't perfect at the bottom or at the top, as you can see them both shift down slightly. Still, as you can see, it's pretty flat. And I just would assume that it's going to stick in this range if we're in a market that's not going to do much. No income growth. People are not having as much money as they used to, having to turn back. A lot of people, I think, were expecting a destruction in the market, including me, based on a thing that Americans would continue to live like they always did, like running their air conditioning unnecessarily, like I'm guilty of right now. I apologize, all you global warming freaks or people that really believe in it, whatever, sorry. Let's get rid of these lines, show you how the oil is just consolidation, no big deal. Now let's look at where it's really fun. Platinum, look at this. Up 4.21% today. After this amazing 6.24% move, I figured platinum was going to backtrace it, but it still was a beautiful breakout. I mean, let's do the D, press the letter D and show you the breakout from the lines again. So as you can see, broke out from a very nice triangle pattern. Very hard to see here with the 50-day moving average, but still, it did it. Bottom line, it did it. Did it well. There it is. There's a triangle you can see now. Boom. Boom. Flag pattern broke out. Flag pattern broke out. Flag pattern held on. Moving higher. Now we're above the 200-day moving average. This is another buy signal, guys. Next day you go long. Today, hello, 5.27%. Hopefully you got 5-to-1 margin on your futures account, something like that. There you go, 25%. Now, at the same time, this didn't work on one, silver, but here it comes coming back. Silver had the golden cross right here. 50 goes above the 200. Only problem is, see the 200-day moving average drifting down? I know it's hard to see. Let me get in closer. Look at the magenta line closely. You can see how it ticks down a little bit right here. On what date is that? Right after the 18th of March. Look at it closely. See it tick down there, the purple line, while the white line's ticking up. Purple line stays the same, ticks down again. White line ticks up. So you have a golden cross with the golden cross 50 and an uptrend crossing the 200-day moving average in a downtrend. So golden cross wasn't as solid as most. However, I still thought it'd be safe to buy here if you wanted to. I didn't go for the bullion because it wasn't nice enough, and it didn't work. However, if you cut your loss, 2.15%. Good thing you did. If you did the golden cross buy right here and you cut your loss because it couldn't hold the 50 and 200-day moving average, you saved yourself from a, come on charts, 4.94% loss. Now it's back above the 200-day moving average. Start to watch it. 200-day turns. 200 maybe kisses the 50. Stock gets above the 50-day moving average. Stock, index, you definitely want to go long. Now, before I go to my favorite form of currency, let's look at the dollar. Uh-oh, failing right at the 50-day moving average. You don't like to see that. Breaks down below the 50 here. People are like me, are like, uh-oh, not good. Looks like it's rolling over after trying to break out. Never going to see a roll after breakout. But then it starts to hold on to the 200, and I'm like, okay. And people like, Josh, don't forget, the dollar could still be very strong. Don't go against the chart. But macroeconomics normally should work out. Still, looks like that my long-term thesis is wrong for the short term. But I'm long-term, remember. Now it's failing at the 50. Now it's failing again at the 50. And look at it this time. Where is it closing? Let me go all the way out in the plus sign. 84.52, 84.45 is the close, so it's rolling over there after breaking down below the 50-day moving average back here by 2.93%. Now it's down 1.34%. Now let's go out on gold. Gold's holding the 200-day moving average. It's starting to move up again. Bottom line, gold looks